Hi, my name is Jonathan Baumgart. I'm the CEO of Atomic Consulting. Today, I'd like to speak about some regulatory changes that are happening in Australia. So, the purpose of my channel is to provide information about the constant changes that are happening in the online FX and CFD trading industry. Some may already be aware of these changes. It's actually not the most latest of news. However, this channel is for those who are new or just learning about FX. So I think these kind of videos are helpful so you can understand previous regulations and also know what changes to expect, since these changes have massive impacts on the industry as a whole. So today I'm going to speak about what's happening in Australia. Specifically, ASIC, which is the regulatory body in Australia and stands for the Australia Securities and Investing Commission, has decided to impose leverage restrictions along with some other changes for the entire country as a whole. So let's begin with leverage changes. So in what's referred to as a product intervention, the biggest aspect of this is that leverage will be reduced across the board in Australia. Now, prior to this, there really wasn't a restriction on leverage, and that made Australia a very attractive region for FX trading. But ASIC has decided to follow in the footsteps of ESMA, which is the agreement in Europe that reduced leverage, and the UK also followed, and thereby is reducing the leverage. So what's going to change? Now, the leverage is set to 30-1 on the major currency pairs. But this isn't just FX only at 30-1. What this means is that only the major pairs have 30-1 leverage. If you want to trade an exotic pair, now the leverage has been cut down to 20-1. And 20-1 is also the new leverage for gold and silver, so these CFDs only. And then the major stock indices like the Dow 30, the SPX 500, etc. If you wanted to trade a more exotic index, that's been now reduced to 10-1 leverage, along with all commodity CFDs like oil, natural gas, corn, whatever it may be. Single stock CFDs, so Apple, Facebook, Amazon, Tesla, etc., now have their leverage set at 5-1. And if you want to trade a CFD of a cryptocurrency, that's now set at 2-1. Now, this change hasn't taken place yet. This video is being recorded in January of 2021, and this will be officially set and put into law at the end of March, specifically March 29th. So there's not much time really for Australian brokers to make these changes. Now, the product intervention didn't just cover leverage. We'll also discuss a couple of other points. So the next one relates to negative balance protection. So what is negative balance protection? This simply means that all FX brokers licensed in Australia have to ensure there's a mechanism in place so clients who are too leveraged don't go into the negative. What this generally will mean is that margin calls will be triggered a little bit more aggressively to prevent clients from running into huge negative balances. This ends up being a problem. It creates confusion. So, in our view, we think it's a good idea. The last thing that a trader wants is not only to have their account wiped out, but also to see it deep in the negative. And it presents a problem for brokers as well in terms of how to deal with it. Most of them generally bring the account back up, but it tends to lead to many complaints and other problems. So we think that this is a good decision by the Australian regulator, and it also comes with more oversight on specific levels for margin calls to be triggered. which in general is better for those investors who are new and don't understand the risks involved with leverage. But some traders no doubt will complain that they can't open more positions and are getting margin called. So it's an adjustment not just for the regulators, but for the traders as well, as those in Europe are also adjusting to ESMA. So this leads me to the final change, which surrounds promotions and deposits. So the last change set by ASIC is basically set to eliminate deposit bonuses. So what is a deposit bonus? Basically, it's an incentive to make more trades. So the most common deposit bonus structure will be something like this. If you deposit up to X amount of money, let's say it's $1,000, and you do X amount of trades, for example, 10 trades within a certain period, then you'll receive some kind of bonus. It can be $100, it can be $50. Each broker has their own terms and conditions. So ASIC has decided to eliminate this, and that's also following the guidelines in Europe. It's now illegal to offer this and other kind of incentives. It's just par for the course, and in my opinion, I think that ASIC is kind of just mirroring many of the changes that are happening in Europe. This also means that other kind of promotions, giveaways, freebies for opening an account are also eliminated. So in our view, we feel Australia wants to take FX trading a bit more seriously to kind of reduce a lot of the gimmicks and kind of the showmanship that made FX not seem like a legitimate investing product and more along the lines of speculation. I mean, naturally it is, but these changes are going to make it more of an investment product because you can't leverage yourself to the hilt anymore, and you won't win, iPads or other fancy prizes for doing so. So those are the changes. Naturally, this has a sweeping impact, and for brokers that are in Australia, if you are looking to obtain a license in an offshore region or another part of the world that does offer more generous leverage, our team can help. And if you just had some general questions about regulatory changes, how this may impact you, and what to expect from other regions, then feel free to contact us. Our team is more than happy to speak with you about licensing, starting your own broker, or any other questions as they pertain to regulation. So I wish to thank you today for checking out this video. Please make sure to subscribe to our channel. That way, whenever we release a new update with other regulatory changes around the world, you'll be the first to hear about it. So thank you very much and have a great day.